Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse candle. And if we do that, what we can see is that we have a 0.32 and 50% retracements, which are lining up precisely with this previous monthly resistance turn support, creating a confluence of support at this zone that we could in fact expect this market to reject to the upside. So from a monthly standpoint, everything seems very bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, what we have to notice is that we did have the creation of this overextended M pattern. And I spoke about USDJPY when the market created this overextended M pattern, when the market was here, explaining all the reasons for which we could expect this rejection to the upside, to see a retracement at least at the 0.32 of the Fibonacci taken on the impulse candle. And what we can see is that at the moment the market has almost reached that upside target, so the pattern is almost completed. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Now, at the moment, from a weekly standpoint, we must notice how this area is very strong previous weekly support from which both these rejections to the upside were created, which at the moment is acting as resistance here. In fact, until the market will remain below this resistance, this area could easily be rejected to the downside. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, this is where things get very interesting. In fact, we can notice that now that the market is below this previous weekly support and resistance and is currently testing it as resistance, we can notice how also on the daily time frame, this is a quite strong supply and resistance area. In fact, by looking left, we can notice how exactly from this level, all this previous move to the downside was created. So as the market is currently testing that same exact supply and resistance zone, we could expect some bearish continuation away from this strong supply and resistance area. Now, only if the market will manage to break above this resistance, only at that point, we could expect a rejection to the upside, as we were already expecting by looking at the monthly time frame. Because if you remember, here in the monthly, we have identified how all this zone here is quite strong confluence of support that we would like to see this market to reject to the upside, potentially completing this monthly impulse correction and impulse pattern to the upside. Now, this means that from a daily perspective, we need to see a break above this resistance. Only if we get a break above resistance after the break on the retest of the previous resistance turn support, this is the area inside of which we could expect more institutional longing of USDCAD, which in turn would further increase the probabilities of a potential rejection to the upside away from this level. Now, what am I speaking about when I say institutional longing? Well, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what hedge funds, so the big players in the market are doing, so the biggest institutions in the market are doing, and we check the data precisely for the CAD, what we can see here is that with the last reports, we had a huge shift to the bearish side for the CAD. In fact, institutions went from having a positive net positioning of plus 6.3k net positions with way more longs than shorts. We had in fact 36.2k longs compared to only 29.9k shorts, all the way down to now having a negative net positioning of minus 63.2k net positions. So the complete opposite, with way more shorts than longs, 82.2k shorts compared to only 18.9k longs. Now, institutions in this case are moving aggressively to the bearish side for the CAD, which means the bullish side for USD-CAD. Why? Because all currencies on the spot are traded against the USD. So if we are checking the data for the CAD, we are actually already checking CAD USD. So since we want informations on USD CAD, we have to reverse everything, because institutions shorting CAD USD means that essentially they are longing USD CAD. So what we can see here is that institutions have been longing aggressively USD CAD, and in this case we could expect more bullish continuation. However, moving back to the technical side of the market, what we have to notice and remember is that we have strong daily resistance at this area. So until the market will remain below this resistance, it can easily continue lower. However, if we get a break above this resistance, that is where things get interesting, because after the break, this previous resistance would become support. And on the retest of this previous resistance turn support, that is where we could expect more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So how I could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, these are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what I could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.